Hello, everyone. Welcome to a 21 Hats conversation. I'm your host, Lauren Feldman. I'm delighted to say that I'm here with two terrific guests, two people who had really promising careers going and then decided to walk away from them and buy a blue-collar business. One is Mills Snell. Mills, wave to us, if you would, and Bob Schwartz. Mills bought a roofing contractor. Bob, more than 20 years ago, Mills was recently about 7 months ago. Bob, more than 20 years ago, bought a chain of laundromats. And we're going to talk here today about why they did that, what they learned about buying a business, what they learned about operating a business, what they would do differently if they had it to do over again. And we're also going to take your questions. So as we get going with this, if you have any questions for Bob or Mills that you want to throw into chat, please feel free to do so. But Bob, let me start with you. You were working for Salomon Brothers as an investment banker when you decided to take this leap. What were you thinking?
My wife would ask me that the same time. So I can totally appreciate that question. You know, fast forward 20 some years, it was the best decision I ever made. But when you're in the middle of it and you start out, you ask yourself that a lot. So, so I was in Chicago working for Salomon. This was in the 90s. I guess intuitively knew that I really wanted to own my own business of some sort. And this was, I guess, before the whole entrepreneurship through acquisition model that's been so, I think, awesome right now and popular. It was more for me to get my feet wet. I had, fortunately, the safety net of my wife who had a career. We were newly married, no kids. So we were living on peanut butter jelly sandwiches and we could do that for several years while I got this business off the ground. So it was a matter of whether I want to build this ground up opportunity in the laundry industry, or I wanted to buy an existing store chain, which is what I ultimately ended up doing. I looked at the industry. I had exposure to that industry while I was at Salomon Brothers, coincidentally. It was a very old line, mom and pop, hyperly local business that was not really professionally run. And so all those things kind of lined up, and I was like, I can make this work. But I learned about it at Salomon Brothers, and yes, I acquired a chain of stores in Virginia. We moved back east. My wife supported us for the first few years, and we're off to the races since then.
All right, we're going to pick that up. But first, Mills, you're much more closer. It's only been 7 months now, so I'm not sure how you're feeling. But can you take us back 7 months? What were you thinking when you decided to buy your roofing contractor?
Still in the honeymoon phase, so it's going great. No problems. No, I'm just kidding. I've been in the M&A space for a little over a decade, and I owned a sell side M&A advisory firm. That's where Lauren and I first met and became friends, and helped small business owners kind of hold their hand and transition from, hey, I own this business. I don't necessarily have kids or employees who want to take it over. How do I land the plane without crashing it? Did that for a number of years, had a lot of fun, had really great clients. We kind of served this segment in between business broker and investment bank, kind of that no man's land in the middle, usually kind of a $5 to $20 or $25 million business enterprise value range. Sold that firm to my partners and went and joined a really unique private equity fund who, Lauren, you've interviewed, Brent Beshore. Brent's a really good friend of mine. That firm's based in Missouri. It's
called Permanent Equity. It's not your typical private equity firm.
Exactly. Kind of the antithesis of traditional private equity. It's buy and hold, buy with no intention of selling, and using no debt. Brent's a good friend. We worked together for a number of years. And then this opportunity came up for me to buy into Aqua Roofing. We actually looked at it at Permanent Equity, and it was in my hometown. While I was there and leading the deal team, we looked at about 5,500 companies for sale, and we bought 4. So a very kind of tight filtration process, very picky, if you will. We bought things that were boring, kind of non-sexy, things that are going to be around for decades. And we looked at a handful of commercial roofing contractors, and that's what really started to be a recurring theme for me. I mean, what I like about commercial roofing is that every building has a roof and no roof lasts forever. And so you're kind of in a nice sweet spot in terms of the demand. Usually whenever somebody's roof's leaking, they want it fixed right away. Price is important, but your customer experience matters a lot, right? When you're dealing with somebody's office or their industrial building or warehouse or, hospital or whatever it may be. So I guess I've always owned things, whether it's real estate or operating businesses. And I knew I wanted to continue to optimize for that. And I got very, very comfortable from the risk side of things, underwriting a deal and working on a transaction, because that's kind of where I lived. And then I was increasingly more familiar with operations. I've never run a roofing business before, never run a service related business or a labor focused business before. But yeah, I'm having a ton of fun doing it and learning a lot.
Well, let's start, Mills. Let's start with you with the actual act of buying the business. You're unusual in that you had a lot of experience on both sides, both helping people buy and helping people sell, or being with a firm that bought. Did you know enough going in? Did the transaction go the way you expected it to, or did you too have things to learn when it was actually you buying the business?
Well, I think there's a few nuanced differences. I mean, one is that, when it's your own deal, it's much more hard to be emotionally detached. As a buyer, really as a seller too, you have to maintain the ability to walk away, otherwise, you're kind of up the creek without a paddle. So, when I was doing deals, when we were deploying other people's money and my paycheck, so to speak, didn't depend on whether or not I closed that transaction I was working on, it was a lot easier to say, hey, we don't want to burn a bridge, but it doesn't seem like you're ready to sell, or it seems like we're too far apart, or whatever it may be. We're not going anywhere. Come back at some time. Well, I left Permanent Equity in order to work on this transaction full time. So my wife going into it was like, how long does this kind of take? And I was like, the average transaction, I don't know, 6 to 9 to 12 months. And she's like, what are you talking about? This is crazy. It took us 10 months, to the day from when I left Permanent Equity to when we closed. And it was the right amount of time. I mean, it depends on the size business, how prepared the sellers are, all those things. But you learn something. If you've done 100 transactions, you still learn something with every transaction you do, whether you're buying or selling. And so continue to learn a lot. I'm learning a lot right now. But if you kind of wait, I'm of the mindset, that if you wait until you're ready, you'll never do it. It's like getting married or having kids or buying your first house or whatever. You have to get comfortable, right, with mitigating risk in certain areas, and then at least define, hey, here's the things that I don't know, at least that I know I don't know, and am I comfortable with those? And I got really comfortable. I was buying a business in my hometown, and so there was a lot of due diligence I was able to do that, most of the search fund model that Bob mentioned, or the entrepreneurship through acquisition, ETA. I wouldn't say that I'm a searcher. I was a searcher. I wasn't really searching. But a lot of folks who fit that mold, they're kind of, hey, I'll buy a business anywhere in the Southeast or anywhere in the East Coast. And I had a lot of roots here. I owned property here, and it was not something that I wanted to move for. So I had some advantages that I think were maybe a little bit unique to me.
That makes sense. Bob, how about you? You've told us that you got familiar with the industry in your previous job. Were you as familiar with the buying and selling of businesses? Was that comfortable?
Yeah. No, I hadn't done all that. I was prior to Wall Street and prior to business school, I was and still am in the commercial real estate side. So I was very familiar with acquiring real estate. And that was about it. Had never bought a business. So no, it was all new to me. Again, this was a long time ago, in the sense where I think things have changed since then. But like Mill said, I think it comes down to taking a leap of faith. You're not going to get it all right. There's so many things I didn't know. Had I known, I maybe would have gotten cold feet. I'm glad I didn't. You kind of have to jump in and just make it work. There's things that you can't plan for. But at the end of the day, I understood the industry. I understood the opportunity. I understood the risks, and we were at a time in our life where we could take those risks. So I think that has a lot to do with it too.
Sure. Can I ask a question?
Sure.
And you don't have to go into detail if you don't want to get too specific, but just generally, what size was the number of, units, or I don't know how you would quantify it in the laundry space, but about what size acquisition was it? And how did you get comfortable with that relative to the amount of risk you were taking?
Yeah. I mean, that's one of the things that I wish I did differently. Again, the industry, it's just I'll answer it this way. The industry is highly, highly fragmented. So it's a $6 or $7 billion industry. There's like 50,000 laundromats out there. So each one is not a big transaction. At the time, this was a 5-store deal, which was probably just over $1 million in value. In hindsight, I wish I went bigger sooner.
That's what you would do differently if you had to do over?
Yeah, it's in some respects, it's easier, as much work to manage something a little bigger than smaller. But you'd go with what's given to you, and that was the opportunity that I had. I did know that there was a big runway of scale in this business or in this industry. So it was just a matter of a lot of bolt-on acquisitions and adding more stores. Right now, it's all across the board. I mean, we literally just closed a deal in September that was, it was pushing, 8 figures. So, they're out there.
That was a deal to buy a chain or a store?
And stores and the real estate with it. So, it can get up there. And anyway, so it's all across the board. There's a lot of variable in size of these stores.
Interesting. When you made that acquisition, was your intention to be here 20 plus years later running the operation? What was the plan at the time?
Yeah, no, that's where I could talk for hours on that. One of the mistakes I guess in hindsight I made they always say, well, you should look with the exit in mind, right? And I did not do that. I didn't have a clear exit strategy. I was young. I was in my early 30s, and I considered myself more of a deal person. I was good with numbers, good with finance, structuring the deal. And so it involved doing a lot of deals to get some scale. So I liked all that. But at the end of the day, 10 years go down and you're like, okay, how do I get out of this thing? Or what is the exit strategy? And now 20 years later, I'm still answering that question as I, keep growing. So I think there is an exit strategy if I want to take it.
Well, let me interrupt you. I'm sorry, but has that been a pain point? Have you wanted that exit strategy, or did you find that you enjoyed operating the business?
Here's the thing, and this is what happened with me, Lauren, is, the first whatever number of years, 5-10 years, it was fun because we were doing deals, we were buying stores. But at the end of the day, business is about people. And I think that you add a tremendous amount of value by operating the business well. And in order to do that, you have to lead, you have to manage, you have to have people. Business is people. And I was never taught that. I was taught finance and deal structure. I was never taught the bricks and mortar of managing people, managing a structure, motivating culture, all that stuff. That's so hugely important. And I learned it years later, and it was the best thing that I ever did. And I learned it from our friend, Jack Stack, great game of business. And it really helped our business, and it made it to the point where I enjoy doing what I'm doing now.
For those who don't know, you're talking about open book management.
Open book management, the great game of business. And we've created a structure that, it's really kind of escalated the playing field for us. And so I'm having fun doing what I'm doing. And if it's a good business, why exit? Right. So that's kind of where my headspace is right now.
Mills, is that where you are too? Are you adopting that philosophy that you saw at Permanent Equity of buy and hold, or are you looking to flip the business at some point?
Yeah. I mean, very, very congruent with what Bob's saying and what you're asking. I mean, I would have just major alarm bells going off, right? Or you should, right? Or the listener should. If I said, no, this is a platform acquisition. I'm doing 3 bolt-ons in the next 3 years. We're going to triple, we're going to double revenue and triple EBITDA, and then we're going to sell up market. Like, there's so many things that can go wrong in that scenario. It's so fragile, right? So, and not to mention, it's highly levered, relies on incredibly onerous amounts of senior debt or junior mezzanine debt, and there's a lot that could go wrong. So to me, I'm content owning and operating AquaSeal for the next few decades and finding ways to build a team that can continue to do that. And we just have tons of opportunities to grow organically, and maybe via acquisition, right? I'm not taking that off the table. It's just usually when people want to do a roll up or a consolidation or grow via acquisitions, it only works if they can grow under that model, because it's so funded by debt, and they have to basically exit before that debt really matures. And I'm not interested in a model like that.
Bob, have you grown mostly through acquisition?
Yes, but as we got, one thing I did do right, and it was probably more by luck than anything, is when we acquired our first tranche of stores, we learned the business, and then we could take the cash flow allowed us to take chances. And for us, chances were finding virgin sites, building stores ground up, and I would not have done that in the beginning, right? That's really, for me, that was too risky. That's putting all the chips on the table. Later on with the cash flow, I could innovate more and take more risk. And I think that was for us, new builds, new site selection type stuff. And we were glad it worked out that way.
Mills, did you have the same kind of learning curve in terms of managing people and sort of the non-numbers soft side of the business that Bob was referring to?
I'm in it right now. I could give you a list of, just the flavor of the week.
Yeah, well, we'll take it. What's the flavor of this week?
I don't want to divulge too much, just because things, are live and happening right now, and we're recorded. But I mean, it's people, right? It's normal people stuff. So, my deal is very unique and probably different than most, in that the two sellers, the two founders of AquaSeal Roofing are still involved. They're still employees. They're still very significant owners of the business, and they're going to phase out over time. They didn't have children or kind of managers or anybody who was going to take over, and so we found a structure that was win-win, where they were able to phase out over time, continue to have upside as the business grows, and it was as much de-risking for me as it was for them. So more, I think, of the kind of people related challenges or opportunities, whatever you want to call them, have to do with just different styles of management, different philosophies of doing business. The founder has grown an incredibly successful business. I mean, just wildly successful business through command and control style leadership. Mm-hmm. And that's not my style of leadership. And so figuring out, right, at what point does the pendulum kind of tip and change?
Yeah. Just to go a little bit deeper. So you took over a successful business that was being operated by the people who started it, and with the idea that you would change the way it's operated despite its success.
Yes and no. I mean, I knew going in, there's nothing broken here, right? I have friends who do turnaround work. This is not turnaround, right? This company isn't insolvent. The balance sheet isn't underwater. The income statement is profitable, all those things. But they were knowingly and acknowledging the fact that, hey, if we grow, we can't keep doing the things the way that we've been doing them. We're probably, we're probably 2 times our size, right? Our infrastructure is half the size of our revenue, right? If it were right size, we would be growing our infrastructure. We would be professionalizing certain things. We would be adopting systems and technology and, et cetera. And so they were saying, look, something has to change. We can't keep doing what we're doing. But the devil's in the details, right? Of how all that gets meted out. And it's been good. I mean, it's been phenomenally great so far. And 7-8 months in, it should be, right. We've due diligenced and we've hashed a lot of these things out, but there will be areas where I'm saying, hey, look, in order to grow, in order to standardize this thing, we still are on, we do 52 pay periods a year. We're still on paper timesheets, running, about $5 million a year in payroll. So there's a lot of room for improvement. But my mentality coming in was, I don't want to change anything for the first 6 months. Let me just get in, learn the business, build relationships, build trust. And then I'll be in a better place because people will be telling me, hey, I've been here a long time. This is my issue. What can we do to fix it? I want to help them fix it, not come in there and say, hey, I've been studying this business for 10 months and I've been here 2 weeks. Let me tell you what's wrong with it. It's just a fool's errand.
Now, I was curious, Mills. So, is there a plan to slowly? Are you going to buy them out, or is that?
Yes, yeah. So it's all basically what took us a long time in our actual transaction itself was documenting all that. And I mean, I've been involved in a number of deals, so I was very curious and very fastidious about these specific details. But yeah, so they'll continue to get bought down over time based on a schedule and based on a valuation formula.
Nice.
Mills, you hit on something that I find really interesting. You're talking about, kind of operations and that there's room for improvement and professionalization and maybe, up the technology a little bit. And I think that's a common thing that people look for if they're in the search business, they're trying to find a business to buy. They look for opportunities where the business is basically healthy, but there's room for improvement. But there's kind of an interesting tension between people who do that, looking for ways to professionalize an operation versus people who really know the industry, somebody who grew up in roofing and knows the way that works or understands the dynamics of the laundry industry. I don't think either of you were expert in the particular industry you went into. You maybe have had, some touch with it. Bob, you mentioned that you had a client from Salomon Brothers, but how do you look at that dynamic? To what extent do you think one is more important than the other? The knowledge of the industry versus being able to professionalize operations?
Well, my 2 cents worth is if it's a basic, I guess it depends on the industry. I personally, I couldn't get into the high-tech world software or something. I would have no clue, and I think I would probably fail miserably. But if it's a basic service business, kind of the businesses we're talking about, I think, regardless of the business, we could figure out how to add value ultimately if you give us enough time. And that's where the patience comes in, right? If you're in this for the long term and can set it up to give yourself a long runway, without investors saying, when am I going to get paid? Then you can figure this thing out. Things take longer than you plan, but ultimately you got to figure it out. And so I think you can do it. I wouldn't do it in a business that, is so foreign to me, like software, medical, or something unrelated, I don't know if I.
No, that's helpful.
I think it depends. It depends on the size of business too, right? So, I mean, Bob, you probably could have, stepped in and run, let's just say a $10 million laundry business because it probably wouldn't rely on much knowledge about laundry itself. You would have managers and layers of middle management who would be overseeing that. That's the way AquaSeal is. They didn't need the foremost roofing expert in the Southeast to come step in and help them. They've got that covered, right? What they needed somebody to come in and say, hey, how do we do more of what we're good at? How do we increase our yield on labor, right? How do we estimate better? How do we make sure from a customer service perspective that we're actually just calling people back and, they aren't falling through the cracks? If you buy, let's just say if you buy $1 million plumbing business, for one, in most states, you have to be a licensed plumber, but two, you need to know something about plumbing because there's not enough revenue to account for, management that can help insulate you from that. And they would handle the tough technical stuff. But if you're at $30 million of revenue in a plumbing business, you really don't need to know that much about plumbing because you're going to have multiple master plumbers. You're going to have guys who've been in the field for decades, who are on staff, who aren't in the field, who can be supervisors, superintendents, foremen, those kind of things. So the size really matters a lot, I think, and on whether or not you need specific technical knowledge and experience.
Mills, can you tell us something about the roofing industry that you didn't know going in that you figured out and now is important to the success of a roofing contractor?
The big one right now, which is a little bit idiosyncratic, is that material availability has gone just berserk. All supply chain is really bad right now. Roofing, for a handful of different reasons, is kind of on the most suffering kind of segments. We have, materials that used to take 1 to 2 weeks to get in that now have a 40 to 50 week lead time. And it's like, do not pass go, do not collect $200. You can't do this roofing project without these types of materials.
Where are they coming from?
It's mainly internationally sourced raw ingredients and then locally manufactured or handled, finished goods. So for example, if you looked at what was happening in the timber industry, right? Not all that long ago, lumber prices were sky high. In almost all cases, lumber just has one ingredient, right? For example, roofing, you look at a roof system, it may have dozens of different components that go into it. You've got, for example, just fasteners, right? Roofing fasteners. We use screws that could cost, $1 to $2 a piece, and a large roof might have 80,000 of them. But you have the raw ingredient, which is a rod, raw steel that comes in a rod that gets threaded in a specific way, heat treated in another way, and then gets coated. Most of those coatings are, an oil derivative, a petroleum derivative. So lots of different, people have to touch it along the process, and that has contributed to longer and longer lead times. Polyiso is the really big one right now. It's a year out to order polyiso, which is an insulation that's used in roofing applications. And the entire industry has kind of conformed around polyiso because it's such a good insulation layer, but you can't get it right now. And most people are used to, right, thinking, hey, I need to put my roof under contract as a part of this new construction or this, this renovation project. And it might be 2 to 3 months out. I mean, you're having to plan roofing, before you plan site work right now, or before you order a steel package, which is just kind of unheard of.
Do you guys do new construction as well as
we do. Yeah, we do both. Part of the reason that I liked Aqua Seal is that we're probably 60 to 70% re-roof. And a lot of that is, we still do like large municipal, like schools, hospitals, bigger square footage projects, but it's a mix of re-roof and new construction.
And so you're bidding on jobs that may not, like you said, it could be months out before you get to them.
Exactly. So typically what we would do is we'd go to a supply house and we'd say, hey, we need prices. And they'd say, great, we're going to guarantee these prices for, 3 to 6 months, which usually is completely irrelevant because they have them and you're going to get them in time. Or it may take a little while. You get awarded the job and they say, we still are going to honor the prices. Now, what's happening is we go to the supply house and they say, look, we can't give you a firm price. It's going to be whatever the price is on delivery date. And we don't know when the delivery date's going to be. But for example, we know that fasteners, for example, have a 25% increase in the first quarter of 2022 and a 35% increase in the second quarter of 2022. So we have to try and educate and communicate with a customer, an end user, or a GC to say, hey, these prices are high and they may seem high, but we're not going to come back and give you a change order that's going to make your head explode in 6 months when it's actually time to do the project. Or we're going to try and minimize that as much as possible.
Well, but tell us about your industry. What did you learn that you didn't know going in? What defines the success of a location or an acquisition for you?
I think the biggest two things have happened. One more currently, and one, I guess, from day one was I underestimated the importance of employees and stores. Again, I'm kind of coming from a numbers perspective, and I always felt like, hey, if you got the right, great, shiny location with brand new equipment and, on the corner of 5th and Main and all that stuff lines up, that you're gonna kill it. And most times that has a big effect. But I underestimated the importance of employees, and at least in a B2C world, how important customer service is. Even in a self-serve laundry operation, it's huge. The one everybody talks about, and it's so true, is they nail is Chick-fil-A, right? I mean, they understand customer service, right? And I always like, wow. So I had to learn that, and it's really made a huge difference. The whole, again, in the B2C world, how important employees are to driving revenue. It's dramatic. Second thing is, which is exciting for us, is the technology. When I got into the industry, I knew it was an antiquated kind of old line industry, which I was fine with. But finally, technology has caught up to this industry. So now there's so much interest in it because of the scalability and the different features that we can do now. Basically, pick up and delivery to people's homes. It's all app-based. There's now SaaS programs that control everything from your machines to the point of sale to pick up and delivery to your route drivers. None of that existed 5, 7, 8, 10 years ago. So that's exciting for me, that we're bringing a whole nother level of sophistication to where we're at.
Can I ask a question about that, Bob?
Sure.
So I'm just thinking about, you've been in it 20 years,
Mm-hmm.
You kind of inherited it as it was analog, and you've made those upgrades and probably started to reap the benefits of it. With where you are right now, how do you make the decision about the kind of cost, right, which is probably a very substantial cost of that reinvestment to modernize facilities or to kind of take that next new upgrade? How do you balance that against your time horizon? And I mean, you're not an old guy by any means, but I'm just thinking, right, it's not like those upgrades are going to last the next 20 years. They're probably going to continue to be, increasingly obsolete. And I'm just curious how you balance that when they're capital intensive.
Yeah, no, that's a great question. I mean, that's where, for me, I'm at the point where I'm not looking to sell the business and create kind of a legacy asset potentially. So if you have that mindset, I think it makes a decision. If it's a really good location and equipment's 10 or 12 years old, you got to put in new equipment, and the reinvestment at one location is easily, $500,000 to $750,000. Mm-hmm. So, if you said, I want to exit in 5 years, you're going to start to think about that. Right. Yeah. Yeah. So for me, it's made it easier if I know that I potentially want to keep a legacy asset here for my family. How all that shakes out is to be determined, but it's one less decision I need to make, and it makes the decision easier to reinvest, which ironically is better for the customer, which then creates more value to the business.
Yeah. Bob, you referred to it before as a self-serve laundromat, but then you were talking about the app and customer relations. What percentages people come in and doing their own laundry?
Yeah, any store that we're buying or building now is I would say, it's more than fully staffed by one person all the time, 24 hours a day. And we offer, pickup and delivery and drop off laundry and commercial laundry applications. So it's a full suite of services where the industry is called the self-serve laundry industry, but really that's just maybe 75% of it. The growth, the trajectory, the industry is a very flat line, stable, decent margin business, good margin business. But as Mills knows, it's leverageable and it's heavily capital intensive. But the growth is actually in the very capital intensive side. And that's where that's the holy grail in this industry, is cracking the code on all this pickup and delivery. I mean, our whole world now is pickup and delivery, whether it's Amazon or Uber, or DoorDash, or everything else. And so the industry knows that people's laundry is going to eventually outsourced potentially outsourced. And we're seeing those trends dramatically impact our industry. How you monetize it, that's what we're figuring out. Now it's become a route. We're now in the route business. We're in the logistics business. We were in a capital intensive business. Now we're all about, optimizing trucks and delivery and all that stuff, which, we read about in restaurants and all that. So, we're trying to figure it out.
Did the pandemic accelerate that?
Yeah, it did. It did. It did. And it's increasing month over month. Yeah. So orders are going up everywhere on that pickup and delivery side.
Interesting. How have you both done in terms of labor during this difficult period? How about you, Mills? Has it been an issue?
It really, we could always use more people. We have about 100 full-time employees. We probably have enough demand. If we had materials, we have enough demand for probably 150 to 175, but we just don't have the infrastructure to support that much production right now. But we have really good people. We have people who've been with Aqua for almost 30 years since the company's been around. Mm-hmm. We pay higher than average wages. Our starting wage, in South Carolina, I don't know how it compares to other parts of the country necessarily, but you could probably make $9, $10 an hour working at a fast food restaurant. We pay $14.50 an hour starting out for somebody who has no construction experience, no high school diploma, GED, anything like that. And then we are a U.S. Department of Labor registered apprenticeship provider. It's one of the first things I did. And we the two requirements of that are wage progression and on-the-job training. And it allows us to take advantage of a state tax credit, but also we get scholarship funds to our technical college network. So we can basically completely subsidize continuing education around like OSHA certification, forklift certification, things like that, to put people on a faster track to increase their skills. But we really haven't lost. We don't lose people based on pay. The folks we lose, they just don't want to come to work. They kind of stop coming to work.
Right. Yeah.
I guess you weren't there, but was the business able to keep operating at full speed during the pandemic?
Mm-hmm. Yeah. So some, kind of smaller hiccups like job site related safety. For a little while, OSHA wasn't clear on kind of what guidelines they wanted people, what precautions they wanted people to take on job sites. But yeah, we've been largely uninterrupted.
How about you, Bob? Did you have labor issues?
Yeah, we had a scare, I would say, in mid 2020, right when COVID, ground zero, when everything was hitting. I remember distinctly because if you recall, remember the term essential services, and if you were considered essential business and it was done state by state, and the governor would determine if your business. And I remember we have stores in Pennsylvania as one of our states that we're in. And I remember the governor overnight woke up and said, everything's shut down. And everything, every single business, unless you were, healthcare or hospital or whatever. And so we had to shut our stores down. It lasted about maybe less than a week. And, they woke up and they said, okay, laundry's an essential service. So that was amazing, and that helped us out. But that was scary. We were like just literally shut. So I have complete respect for all these restaurants, and that's just brutal. I just don't know how these folks have, God bless them to getting through it. But just
not
waking
all of them have,
and just shutting your door and just closing it down was just ridiculous. But anyway, we got through that. Labor is a little what Mills said. Our core 80% have been with us a while, and I think we provide what I hope to think is a great culture, and they don't turn over. We have about 125 employees, so we're looking for about 5 positions right now, which isn't a dramatic amount. We could add another 5 on top of that. But what ends up happening is when we build or buy stores, that's when we have to kind of get in there and do a culture fit with the people that we're acquiring, and hopefully they'll be with us. But if not, that's where we have to kind of go out and put the pedal to the metal and kind of upgrade the employees at the stores, depending upon what we're getting.
That's interesting.
Is there a mechanism that you use for that kind of cultural assimilation?
Yeah, it's tough. We have a game plan, a little playbook again, it's fundamentally the great game of business, and open book management is how we kind of structure it. And so we have a deck that we go through with all new hires, and we have a buddy system, kind of a mentorship inside their stores, and we have area managers that are indoctrinated in how we do it. It's not easy, it's not perfect, but it works. It just takes time. It just takes time.
In that great game playbook, kind of the ultimate last step of it for many companies is employee ownership. Is that right? Something that you've considered as an exit?
Yeah, I've looked at that really deeply in the last couple of years, and I'm not going to say no, but I've heard yes. I've heard pros and cons, right? I've heard both sides. I'm not committed to it right now. To answer your question, I'm not sold on it.
What's the biggest concern?
Just the complexity, and sometimes you're adding a level of complexity that is not necessarily valued by, you can achieve the same end result with less complexity doing other things, whether it's a better bonus structure or another plan that they have out there that is less involved and less complex than an ESOP. Now, I know a lot of ESOP owners that love it. So, I could be persuaded either way, but I'm not completely sold on it yet.
With both employee ownership and open book management, which you have adopted, one of the interesting things I've learned through the years is that oftentimes the most difficult people to sell on that are the employees themselves. That's right. Don't necessarily want to have the added burden of understanding what drives the business and how the books are looking. And they wonder why management wants them to take over that responsibility instead of doing their job the way they're supposed to. Yeah. Did you have that? You're having kind of an interesting business to implement this. And I'm wondering what kind of reaction you got from your employees when you told them you wanted to open the books and involve them. Yeah.
It's a learning curve. It's taken us 3-4 years of hard work, but it paid off. I think the misnomer, you can create an ownership culture without necessarily having to go to ESOP. And I think we've done that. But what the great game and open book has done for us is it creates a high level of trust and transparency. So our employees can trust us, the owners, so to speak, or that we're all in this together. And it's a very shared wisdom. It's the collective wisdom of the crowd. So I think there's a lot of buy-in. It takes time. It's a lot of work. It's very rewarding. It's very worth it, but you don't have to, you're right. At the end of the day, some employees don't want necessarily the burden of that, but they like the idea that you're transparent, you're open with them. We know where everything stands. It's very easy, there's a lot of value to that. There's a lot of value to that from an emotional standpoint, from the culture you're trying to create,
Interesting. I'm wondering, have you guys figured out what? Well, let me ask you this. I think people like me in the media are responsible for over glamorizing certain industries. Bob, you mentioned software before. Mm-hmm. We pay so much attention to venture-backed companies in Silicon Valley. You guys chose to take a different route. And, I guess I'm curious about two things. One, did you do that because you saw it as kind of an unappreciated area where people didn't realize how much value there is? That's one question. And the other question is, what was that difficult psychologically? Was it hard to explain to people in your lives why you were choosing to buy laundromats or a roofing business as opposed to doing something that people read about in glossy magazines every day? How about you, Mills?
Yeah.
I'm sorry, Bob, but
no. No, I'm wearing Carhartt right now, and work boots, and I'm driving our most beat up truck in our fleet. I think it depends on what you want to optimize for. I mean, I'm married. I have 4 kids. I wasn't, trying to like find the most interesting thing to talk about, at the bar with people or something like that.
Although maybe you did.
Yeah. Well, ironically, I guess it does kind of trend that way. But what was important for me was de-risking. Right. So I wanted to invest in something and put my time and energy and capital into something that I could understand and that wasn't subject to whims of change. Every building has a roof, no roof lasts forever. My kids are much more likely to pick and invest in the next hot app than I am, right? I just have I bring no edge to the table. Mm-hmm. I do happen to know a bunch of property owners in South Carolina. That's an edge that I bring to roofing. So it was de-risked for me, but there's probably a computer science kid at the University of South Carolina or wherever, the university is in your town. They would look at roofing and they would go, look, that is the riskiest thing. I would never touch that with a 10-foot pole, but they could absolutely write code and develop an app. So to me, it was just logical and it de-risked based on my criteria. But we talk about, a lot in some of the circles I run in, buyer business fit is so critical. Like I can't stress that enough, buyer business fit, because you could get sideways really fast buying the wrong type of business for you.
Mm-hmm. How about you, Bob?
Yeah, I mean, I would agree with Mills. It was interesting at the first going from an investment banking world to the coin laundry industry. But here's what I would say: it's at the end of the day, a couple things. One, I think people need to do my person as I'm getting older is it's more, as well as the business fit. You have to create a life plan or, a personal plan. Right. And I mean, my dad wasn't the most, how should I say this? He wasn't, he was a workaholic who was more absentee. And I did not want to do that with my 2 boys and my wife. Right. So I wanted to create a structure and a company or an environment that fit my life versus having my life fit the business. So that was number one. And that was very
important. Were you able to do that?
100%. Yeah. It's ironic because I've had we have offices now, but I had a home office for the first 5, 6, 7 years when our kids were young. Right. And I was around. I went to every single baseball game, soccer, lacrosse, you name it. I was at, I had the flexibility to do that. When I was at Wall Street, no way. And let me tell you the other thing. When at least in my world, when I was at Wall Street, you look to the right and you look to the left, and everybody's smart. Everybody's hardworking. There was no edge, like what Mills said. You have to I felt like I needed an edge, and I'd rather go into a basic service business that was had a bigger upside as far as professionalism versus competing head to head with everybody else who had a great college degree and all that. So I tried to, why compete on a level playing field, right? So, and I wanted that business to fit my lifestyle. So that's what mattered to me. And that's how I looked at it.
Those are great answers. Have I missed anything? We've covered a lot of ground here. Mills, would you have any specific advice at this point for somebody who's interested in setting down a similar path?
There's kind of no substitute for, to use Warren Buffett's analogy, like standing at the plate and watching pitches come by. If you're like wanting to buy rental homes, you can sit on Zillow all day long and, analyze those deals to death. But at the end of the day, like you got to walk inside a house, you got to make an offer, you got to write a contract, you got to get burned, somewhere along the way. Yeah. So putting yourself on a learning curve, I think, ultimately is probably, it seems unappealing, right, in this kind of vein of conversation, but I think it's critically important. The other, I guess, thing I would say is that there are certain really transferable skills that you can bring into business operations that a lot of people discount, like accounting, right? You could have an accounting background. You could be a great asset inside an operating entity. I do think that people tend to fall into the trap that if they're going to, you know, buy a business, that they either need to do it alone or that they need to do it, you know, in some way that kind of boxes them out of a lot of upside potential. And there's just a lot of options out there. There's a lot of ways to skin the cat, so to speak.
How about you, Bob? Yeah, any advice?
I would second that. I wanted to add though that for me, what I think is really important is if a person could uncover what their unique ability is. You know, I've had some great coaches that I look up to, mentors, and one is a fellow named Dan Sullivan, who runs a strategic coach. And years ago, he helped me work through what my unique ability is. And everybody has a unique ability, right? It's what you do that's just really, really good. And everybody has one. It's where you operate 5%, you know, you're in the top 95%, right? So I think it would be very helpful to understand what each person's unique ability is. And you can bring that to any operating business. The key is you operate in that unique ability and then offload everything else as best you can. And when you can do that, then you're in your sweet spot, and then it really becomes fun. And you know, it becomes way more than just financial reward.
Well, about that becoming fun, I guess it's too soon to ask Mills this because, as he told us, he's still on the honeymoon. But was it always fun, or did you have a moment when you really questioned why you'd done this and wondered if it was a mistake, Bob?
You know, the first few years was a lot of fun. And then when I got into management side, it became work, because that, I would say, wasn't my unique ability. And as we got scale, I could hire people who were really good at it, and I could put the open book structure around them, and I could get back to doing what I was really good at. And now it's fun. So, you know, I've kind of come full circle.
All right. Well, this has been great. My thanks to Bob Schwartz of SuperSuds and Mills Snell of Aqua. Really appreciate you taking the time, guys, and sharing your experiences. I'm sure a lot of people are going to get a lot out of this.